It's me here with a quick update on the EUR USD pair. The euro is ticking up this session on a mild risk appetite after the weekend. It was a little bit choppy overnight, as you can see from the candles here on the 1-hour time frame. But overall, a very mild risk appetite. The euro is gaining versus the dollar. Now, what's driving the market? Well, we had the Ukraine summit over the weekend where Zelensky met with Putin in the company of other European leaders. And basically they pledged their support for Ukraine in terms of more weapons, more military aid to Ukraine, but no actual substantial aid in terms of like financial aid or actual help on the ground, boots on the ground. So nothing really substantial came out of that meeting over the weekend. However, it seems like the market is pricing in the fact that maybe this conflict is going to have a resolution sooner rather than later. And the market likes that because if there is a resolution, then maybe we will see less sanctions, more trade, and the economy can reopen. So that's why we're seeing this mild risk appetite this morning. Again, nothing concrete came out of the Ukraine summit over the weekend, but the market's trying to price in any good news that it can get. So we'll see if this holds up during the London session. Right now, we're in the middle of the London and New York overlap, so this is usually the most liquid we'll see in the session. So we'll see if the euro can hold these gains. I'm slightly skeptical given the fact that we've seen so much selling pressure over the past few weeks. But in the short term, the euro is gaining right now on a mild risk appetite after the Ukraine summit over the weekend. If you have a look at the 1-hour time frame, again, very choppy overnight. You can see we had a low and a high almost within 20 pips. But right now, the market is looking towards the 1.0150 level, the previous psychological level, now turned resistance. And if we can't break that, then I think the upside potential is limited. The next level to watch is the 1.10 level, which is a double top from late February, early March. That's about 40 pips away. So I think in the short term, 40 pips is the upside potential if we can break this resistance, which is currently at 1.0950. On the downside, the next level of support is at 1.070, which is the low from last week. So this pair is consolidating right now. We're in a very tight range, probably the tightest we've been in since the beginning of the conflict. So that tells you the market is unsure of what to do. It's unsure of what to price in. We've got a lot of conflicting information coming out of Ukraine and Russia. So until we get a clear picture, I think this pair will continue to consolidate sideways. But in the short term, the bias is slightly to the upside on a mild risk appetite after the Ukraine summit over the weekend. That's all I got for you today. Thanks for watching, and I'll see you on the next trade.